Deal for it to reduce the amount of data it's going to consume. So, two ways to identify structures. First is for it to make any short at any premium or to buy at any discount, you need to identify a valid order block or a valid POI. These are the zones that you're looking up to. When you zoom into a chart, if I zoom into this chart, you can see that the trend is on a downtrend. That's the first thing you look up to. As every trader, you need to know the position and the side the market is heading into. If market is on a downtrend, your best options to making money is finding a short entries on those downtrend. Now, for you to change, like to market to eventually change from a downtrend to an uptrend, you need to create a change of character. If the downtrend happens to be on a higher time frame, it has to be a change of character on a higher time frame. That is not an exception. So now you can look at this chart. Now we have what we call higher high, higher low, lower high. It often happens when we're on a downtrend. Market tends to be creating break of structure, and then keep on going until it's able to take out the upper high that is here, making it to have a change of character. Once that happens, you're going to see markets go above all these levels. It also happens most of the time, like 98% accuracy, 100%, unless there's a news or something that comes up that overall changes the structure of the entire market. You get it? So that's another thing to pick on. So once you spot a token or once you spot what to trade on, you first of all move to a higher time frame, identify your trend, then you come down to a lower time frame to make your analysis. Now, what are you focusing on? Focusing on structure. You have your analysis, you know that you trade structure, that's your edge. Psychology is quite different from technical analysis. You can know everything that you know in this crypto market, and yet you can't even make money because your psychology is messed up. So once you know how to analyze, you know how to spot token, psychology is the most important thing. And some of us are very, very knowledge and all those things, but we see us, we are not making money. It's not because we don't know what we are doing, but the psychology is so messed up that you can't balance what your outside life looks like and what you do in your trading charts. Sometimes you see focus on charts for a very long time on something you shouldn't be watching. And then dividing on chart movements is quite wrong because it's not going to be a perfect move. In as much as we trade to know what we are doing, giving it a space and a time for it to deliver is very, very important. So, like I'm saying, we have identified a trend. This is a downtrend. Market is on a downtrend. Now, downtrend or higher time frame requires higher time frame liquidity. Like I said, liquidity is money, and you're trying to take money from other people. So we are looking up to get liquidity. So if you look at this place now, market is on a downtrend. And if you look at the chart very well, you see that liquidity often shows itself by multiple equal lows or multiple equal highs. That's what liquidity means. In this kind of structure now, we also have liquidity here and we have liquidity at these levels now. Most likely market tends to take out the higher the closest liquidity to itself. That's what market does all the time. So the closest liquidity are often considered to be taken out rather than higher liquidities. So the closer liquidity that we have here is this one compared to the one that we have here. So the markets have a high chance of liquidating people that is here before coming to liquidate people that is here. You get the point now. So and also we have like we have premium and discount. We have what we call equilibrium. Is the half points of a trend. So an equilibrium can be found at this side, which means once markets bridges this equilibrium, we know that now market is now closer to taking our liquidity here than it's closer to taking our liquidity here. So for now we are above the equilibrium on this buy, so which means market is hard, like market have higher chance of taking liquidity here than taking liquidity here. See how simple it is. But now what market does to you is quite imaginable because once you know these things right now, when you have the money to trade and you make a position, you see that everything that you know often disappears. Not because you don't know what you're doing, but it happens often if you didn't set up psychology very well. Now you need to have rules, you need to have things that you need to achieve, you need to have rules or things that you want to achieve. Let's say I wake up today, I I have let me say I have $1,000, right? And then as a trader, if you have that amount of money, you know that you are compatible to making that amount of money. Making less of it is going to make you look small. Not only that it's going to make you look small, but you might not be able to achieve or reach up to your goals. Now you need to set up targets that could help you. If you are somebody that's often satisfied with how much money you make, that's when trading is going to favor you, because some of us are not really satisfied. I could make $1,000 today, and tomorrow I'll keep on checking that $1,000, knowing that fully well that $1,000 could stay 1 month for me. Having a wonderful trade that can cover up your entire 2 weeks and you don't need to trade again is a blessing. Some of us mess up with it. I could have a wonderful trade today and I see it go to trade next week. Market could take it back. But when you have a wonderful trade that could cover up your entire 2 weeks and you don't go back to trying to analyze markets, let's say for another 1 week, you are the best trader in the world, you are like top 1% of the people. But it's hard to see people that does the same, because it's quite addicted to always ignore what you know, and also not to make enough money. There's also things, but trying to make that enough money can get you killed, right? So let's go back to the structured thing. You might not get everything that you want today, but trust me, these are the few things I can just give you, and every other thing comes after, but it's going to be a gradual process. So what you learn today is POI. POI that is valid, order block that is valid, is a sweep of previous liquidity, which we call injected liquidity. This is what we call previous for this sell, we call it sweep of previous buy, which is here. Market first sweep, then created a sell, giving us a change of character, which is called an order block. The same thing happens on short. Sweep of previous liquidity creates another block, then sniping before selling. So without this happening, every other thing that is up above here is going to be without this happening, everything that is above here is liquidity. But once it have happened, like this one now, it didn't happen any place here. Sorry for that. It didn't happen anywhere here, so which means here is the liquidity, but it happened here. Here is often the POI that you look to short up to take liquidity here. So for now, this is what I can give you. This video has been long enough. I should be the best option by posting it on YouTube, but I believe you grab something from this video, and do also make use of it. By next Saturday we keep on with another thing. Thanks for watching, guys. See you guys on my next video.